All right, so we have a fantastic panel for which I actually have to thank my friend Alberto Moel over there. Thanks for helping me put this together. Much appreciated. If you need to make your industrial robots smart, please go and talk to him at VOBot, and he can help you with that. So now to dive into the topic, and maybe starting with the first round of introductions, we'll start. I think we'll end with you because you have a very special position in that ecosystem. And we'll start with Matt. So Matt from Tectonic Ventures, can you tell us more about what you guys do? What's your, how do you look at deep tech? What kind of stages?
Sure. So we're really B2B, not necessarily deep tech focused, although we end up in some deep tech, including SEMB, for example. Mm-hmm. So we're B2B, we're early stage, taking the firm anywhere from inception all the way through the A, really trying to help with that process, develop the firm, get them ready really for their A. So a small $50 million fund. I'm also a professor at MIT, so I see some of my students.
What do you teach?
Actually, I teach fintech and I teach entrepreneurial finance at MIT. So we do a broad range of investing and really just looking for, it's not really about the tech or how breakthrough it is, but it's about the solution. It's really sort of applying like what is the problem and why is this the right solution, and then we're willing to take some risk on can it actually be developed.
Okay. John, tell us more about what you do at Anzu Partners.
Sure. So at Anzu, we are a VC PE firm with offices in San Diego. I'm in the Boston operations and headquartered in DC. We have about $250 million under management across 2 funds and about now 17 companies in the portfolio. We're very much in the industrial sort of breakthrough technology space, which covers a lot of what you see here. You know, think materials, manufacturing technology, sensors, things like that. I think what makes us a bit unique is that we are very hands-on in a way that I think a lot of VCs choose not to be. So that includes sort of offering technical support, like the rapid prototyping, wet bench experiments, coding. We hire PhDs and advanced degree candidates with masters in science and engineering disciplines to help really work alongside and partner with our companies to move the ball forward. In addition to that, I think we have a platform of services that includes, BD, accounting, HR, all the complementary skill sets that most young teams don't have, and helping them just move that company forward and onwards and upwards.
It seems you cover quite a lot of those functions, like this platform VCs are doing. Okay, that's really interesting. So Frank, tell us more about Next 47.
Yeah, so Next 47 is kind of a bold experiment to reinvent or turn CVC on its head. We have a bunch of investors headquartered in Palo Alto and a bunch of other offices, but we also have a business development team of about 20 people right now and growing. That once we invest in a company, we put those business development people on the project, and they brainstorm with the companies for how Siemens and the Siemens ecosystem can help that company grow. That usually involves some internal resources like help with patents, help with export controls, help with regulators, but it always involves introducing Siemens customers to the startup. Getting in front of Siemens customers, getting just informational interviews, gathering data from Siemens customers. And Siemens is a very large industrial conglomerate that serves about 98% of the biggest company of the 100 biggest companies in the world, and probably most of the 10,000 biggest companies in the world. So if you want to get in front of a customer, we probably have an account manager for that. That business development stuff is a bespoke kind of handcrafted model that we're building on each year. We're learning, but for the most part, we're just trying to brainstorming with the companies and figuring out what works. The other aspect of what I do is act as a strategic investor for Siemens. That's a more traditional CVC model. The companies I'll talk about today are actually strategic investments in deep tech. That's not necessarily always going to be true, but at the moment, what I would call deep tech are both companies that I could validate with internal experts at Siemens. So it's Next 47 is a two product approach, $1 billion fund for what we call our core deals. We can invest in anything that we can put through the Siemens ecosystem, and the strategic deals where it's really about an interest of the big house of the parent, and I think that probably covers the model at Next 47.
And so Siemens is your only LP, right?
That's correct.
Okay. Cool. So I wanted to have you as the last to do an introduction, because your position is very unique. You created an organization that helps robotics companies. So you're not an investor, but you work with a lot of robotics startups at different stages from the area and also beyond. So can you tell us more about MassRobotics?
Right. So MassRobotics is a nonprofit organization that acts as a kind of a co-working space for robotics companies. So we're an innovation hub. So we provide the deep tech. I call deep tech robotics because it's a combination of software, hardware, mechanical, electrical, systems, sensor fusion. It's very deep tech. And so we provide them software, design software, hardware that they can work on. So if they have a software, let's say product, they can use our arms and our mobile platforms that we have in the space. We have 2 humanoid robots, and then we also have soldering stations. So similar to what you were describing that you have your companies go to. Is it in China?
Yeah.
So something like that, but we don't take equity in the company. So the companies come into our space, they pay rent, and then they get all the benefits of being in the space, being part of the community. We invite VCs to our space twice a year. So we have demo days. But we're not really an accelerator. We don't have a program where you come in and you're in for 5 months and you leave, and we have heavy mentorship. That's a Mass Challenge, who's really like a feeder organization to us. So we work with other incubators that would forward their graduates to us, and we would take them. So we're looking to kind of escalate the companies, introduce them to manufacturing, hoping that they will grow to 30 people and move out, like we've had a few.
What's the typical stage of the companies that join?
They're pretty early stage. Most of them come in with 2 to 4 people at the most. And we've had one company who has been 2 to 4 people since we opened. And then we've had another who came in with 4 the first summer, and they grew to 30 and they moved out in December. So they're pretty early stage. A lot are self-funded. Some have SBIRs. It's all different funding. So there's no real one common funding route.
And in your organization, how is it funded and supported?
So we are solely, until this expansion that we're doing, just private industry. So we have companies like Autodesk, and actually, what did I just see today? SolidWorks. So companies who came in and just made donations when we were first getting started, and now we have an annual sponsorship, but it's pretty much all industry.
Okay, very good. So in the first part, I tried to kind of volunteer a kind of working definition of deep tech. So just wanted to see with you whether you had some different views or adjustments you wanted to make on that, maybe starting with Matt.
Sure. I mean, obviously, it's very hard to exactly define. But I usually think of it as sometimes you talk to a company and they have some new solution, and it's not a question of whether or not that solution can get built. It's just a question of whether they'll build it well and whether it will be useful. And then sometimes there's just something that needs to be invented. Right? It just fundamentally, you're not sure that can get done. And that's where I sort of draw the line as it might have been a great idea, but we never got there.
There's a technical risk
There's
that's
some
significant.
technical risk that says, we won't be able to do it. Versus the software, you might build it badly, but you can then build the software to do that. So it could even be in software. You could have we need a new invention in the software to make it work, although it would be kind of stretching the definition. But
Okay.
usually it's got a hardware component, although you can have hardware that wasn't very deep tech.
Yeah, that's true. That's true. Yeah. John, what do you think?
I think you had a slide up around whether you need a PhD to understand the tech. I think that you don't need one, but it helps. Oftentimes, I mean, typically you need to go that deep in the IP to understand the art of the possible and what's, what looks like an ugly duckling and how it turns into a swan, right? So I think there is an element of, in some cases we've actually invented IP for our portfolio companies. That's how deep we have to go sometimes to understand, is this really a breakthrough and is this relevant?
Okay. Frank?
Yeah, I think it's a moving target. You did a pretty good job of talking about some of the aspects of it. I think of it as, going back to what you said, as having multi-disciplines. So something that's not just coding on, program code running on a off-the-shelf processor. I think of it as, we break it down into there's R and there's D, and the R and D. So there's a little bit of R left, some is it possible risk sometimes, although that doesn't necessarily capture it exactly either. I think it's. I also think of it as how world changing it's going to be, right? How you have to change behaviors, or how deeply you have to change behaviors, because we talk about changing behaviors with lots of venture experiences, right? You have Salesforce was a change of behavior, but it wasn't really that deep a change. And then there's also as a dues paying geek, it's how Nito Torpedo it is, right? It's how absolutely cool the world's going to be when this thing is. Right?
So impactful.
Yeah.
So is it impactful?
I just want to make sure your microphone's on. Have you turned it on the side?
I got the green light.
Yeah. Okay, so that's good. Okay, I wasn't sure you were. Maybe it's because your color is on the way. It's okay.
It's good.
Okay, sorry, it's just maybe just me.
I don't necessarily think you have to have a PhD to make it to be tech, only because a lot of our companies at MassRobotics, they don't have PhDs, but it's still hard tech, right? So it's a combination of the electrical and mechanical. If it's a drone, you have to understand weather. So it's really multidisciplinary. So you're not just
would you
one.
say that pretty much all the companies in your space belong to the deep tech category, or maybe some are more like simpler things? Or?
I would say they're all deep tech because they all have some type of hardware mixed with software that is a long return on investment. So I think that's maybe another definition you could throw in there, the long return on investment.
Okay, I think more or less it's kind of converging as a definition. So I covered like a few different topics in the introduction, and I think we could start by talking about what do you see as the most interesting markets for you at the moment. What's too hype but doesn't seem to have a lot of like real legs, and what are the markets that excite you most? Matt, if you want to start.
Yeah, you even told us we were going to ask this question ahead of time, and I'm asked this all the time, and it's just like, it's sort of not how I look at things, so I have a very hard time answering it. I mean, there's so many things with so much hype, and usually what we're looking for is just something that's got a great solution, regardless of whether there's hype. So the only thing the hype does is it sometimes prices us out of something. We'll just think, okay, we're out. But it's just fundamentally whether it's out of favor or in favor, until it gets really bad. So the problem with really bad, as we were talking earlier, is financing risk. If something gets really out of favor, it's very hard to do.
So something that even you would like to invest in, you feel has legs, but you feel it's going to be really difficult to finance later.
Exactly. It's just you can tell that none of the other, we're seed stage. We've got to bring it to later investors. And you just I can look at some things and say no. Nobody I know is going to want that. Even if I hit the milestones, we couldn't get it done. So sometimes things are really out of favor, but sort of in the kind of hype cycle. There's always funny things like now. People like to say AI all the time. It's a little like saying we have software.
Yeah. That's true. It's electric.
Right, it's electric. And we use the internet too. It sort of pours virtually anything you bring to that is going to have data. So the words get into hype, and then people start saying.
So what I hear from your answer is that actually you don't have a particular sector of favor. You want to see whether that's a good problem. The targeting good problem is a good solution. That's exactly. More or less fundable, not just by you, but on the trajectory to market.
So it's usually around more of a thesis of something that's changing in the world that then could hit different verticals.
John,
yeah, I completely agree. I mean, I think there's a bit of a mixing between like what a market is and what a technology. I mean, there's a lot of technologies like AI and quantum that have a lot of hype, but we monitor those things. But I think the really exciting markets for me are the markets that are very sleepy and haven't changed for 30 years. And now all of a sudden you have a chance to disrupt that with the new technology. So it's actually, traditional markets are actually quite interesting because they're big and there's a lot of slow-moving players that can't adjust to disruption.
Quite agree with that. It's like I showed some examples. We have like a number of companies in in the cleaning space, for example, which is a very slow-moving market, but now you can disrupt with robots, or cleaning, inspection, maintenance. All the physical world needs that.
Exactly.
So it's and what's interesting, when you build a company like this, you're actually entering the cleaning sector. You're not entering the robotics sector, whatever that is, right?
The established markets. I mean, if you don't have to build a market alongside building a company, you've solved at least one of the problems, right? So, yeah, exactly.
Yeah, the taking
But
like
not
big,
quite as exciting.
Yeah, sure. If you're in it for adrenaline, go for it.
So, Frank, what do you think? Because I mean, Siemens very established traditional business. I mean, kind of traditional business, pretty high tech, but very industry focused. So how do you look at those different?
Yeah, so I like a couple of markets that there's been a lot of failures in, a lot of failed attempts. Predictive maintenance is one of my favorites. When I joined Siemens, Venture Capital in 2014, and there's a couple of blank checks on my desk. We were looking for someone to do early stage. They recruited me, and one of the blank checks was for predictive maintenance. And I swear I couldn't find anybody that I was willing to write a check to. But it's still a very, very captivating idea, right? If
any downtime in industry costs so much, right?
Yes, but every business I looked at was service bound. So I'm still looking for that diamond in the rough that can get around that. Other things like I have made investments that are so far doing well, attacking companies that are really, really profitable and really, really tightly controlled and cannot innovate their way out. And I guess I started with I'll end with the most important factor is their customers are looking for alternatives. They charge a lot, they're essential to some business, and their customers, I won't say hate them, but they're like, these guys are just sucking the cash out of me. I've done a couple of those investments, I'm looking for more.
In what kind of sectors?
Well, I don't want to mention companies in particular, but model-based design. There's a local company here in the Boston area that, again, tightly held. There's a couple of companies in BPM that, again, very, very critical, tightly held. Just they won't see it coming. They just won't see it coming. Lots of industrial software that's been in place for years and years, and their customers are just like, please give me an alternative. Right? When you find those customers saying, please give me an alternative, that's an opportunity in my view.
So, Joyce, you're more focused on the robotics sector. Do you see differences in the way it segments, on which companies seem to do better than others?
So right now in robotics, the big hot sectors are logistics and manufacturing.
Like
And a lot of that-
200,000 robots in Amazon, right?
Right. But they kind of, when they exited the market for everybody else, that kind of opened the doors up for all the other innovators who came up with different solutions, who came up with solutions where you don't need to change your whole warehouse. You can buy 4-packs, and they can just help in the roads.
Yeah, less involved solution.
Right, and that has really gotten tons of traction on different ways to build a warehouse that isn't something that picks up a whole shelving system and brings them to you, right? So ones that have tracks, that have bins that are going around.
Kind of the next wave.
There's so many different solutions, and the market is wide open because how many consumers want their goods faster?
Yeah.
And so, and what guy wants to be running in a warehouse to pick something up? So the guy can be standing at the end. So really it's a lot of augmented robots to augment people in the workplace. So that and manufacturing.
And I guess a lot of companies who don't do that transition to robotic solution won't be competitive in the future.
You can't hire people they're going to do that, right? So
Or they
or
can
you're
do
paying
it
a
as
lot of
fast
money,
or 24
so
hours.
It won't be cost effective.
Yeah.
So we also have taken a look at a lot of manufacturers around Massachusetts. So I don't know if you know this, but there's 7,000 manufacturers in Massachusetts, and they're all 100 or less people. And if you look at their workforce, they're all like within 5 years of retiring.
Yeah.
And so one of the companies we were looking at, Vibram, who makes the soles of all of the Army
Famous.
boots, every Army boot, and it has to be made here in the U.S. They brought us in and they said, look at our workforce. They're all over 55. And how are we going to make these shoes? And we were watching guys just taking the plastic and putting it in the mold and pulling the mold thing down. There's ways to automate that. So that's like the practical, those are the two practical examples, I think, logistics and manufacturing.
Is this still deep tech? this motion?
A robot doing it would be too tough. Actually, that's actually pretty easy because there's already robots that can do that. But it's a matter of how do you get them there? How do you get people used to using them? How do you
Or
make
picking
it
something that's
usable?
not perfectly placed and putting it
Exactly.
somewhere else. That's
So you have
that's
to put
There's
complicated.
the QA around it too, right? I mean,
Absolutely.
But there's vision that can, there's all kinds of vision solutions that can do the QA. I mean, we did that with some fish processing recently. So I think the hype one that I love though is the autonomous vehicles. So, I mean.
It gets a lot of press.
Well, I think
It's a huge
the
market too, right?
technology's there, it's a huge market, it's a necessity, it's game changing, but the
With years of
regulations and the policies and
Yeah.
insurance and that's the stuff that's really holding that back.
Yeah, because it's outside. Anytime there's an accident, it's like all over the news and
So,
it
yeah, so
sets
the
everybody
first two
back.
won't kill you. I mean, with autonomous vehicles, if something goes wrong, there's life, right?
Yeah.
Well, robots can kill you, though.
That's why they're generally in cages, except if they use
That's why they're
some
doing
smart
collaborative robots is the big thing, right?
It's what you're saying about industry is interesting because there's the whole debate about bringing back more manufacturing to the US, thinking that's going to create jobs, but there's actually a lot of
But
jobs,
it
but
will
people don't
create
want to do
jobs,
those
right.
jobs.
Yeah,
So
it's not a
those-
supply problem, it's a demand problem.
Yeah, yeah.
But-
So
but
it's
those-
actually
those
a
factories
labor
are gonna-
crisis in the
right,
industry.
The factories are gonna go under if they don't get automation.
Yeah.
So, and then, we're looking at fish processing, and you look at these women and men standing on the line, and they all have the masks on, and they're all wearing the blue coats, and they're all over 50, and they're doing it because they don't want their kids to do that.
Mm.
They want their kids to build the robots that are gonna be on the line.
You asked actually like, what's hot?
Mm.
And actually one of the things that we think is hot is fear of Amazon.
Fear of Amazon.
Yes, no, I think that's.
That's what's
I think
on.
that's- if
Finding
they-
ways to automate.
If they change the expectation to 1-day delivery, they're about to do it in 2 weeks.
Scare the crap out of
That's gonna
everybody.
drive a lot of
A
companies.
lot of my customers at my deep tech companies are all the ones saying, I gotta catch up with Amazon. So if you do something that's a little behind Amazon or the others, you'll have a lot of it.
It's interesting because from the consumer perspective, they don't necessarily see all the technology and all the robots and all the automation that goes on at Amazon. It's actually quite impressive. Like people think of just the little like $30 Alexa dot, but there's lots and lots of robots. So Amazon, of course, has the Kiva robot deployed in their warehouses, kind of first generation warehouse logistics. But now they also did a partnership with a company that's doing forklift automation. They acquired a company that does last mile delivery.
And they're spinning out, right? They're spinning out their own employees. They're paying them to start their own last mile delivery companies. That's a business model innovation, which will be interesting to watch.
So it's interesting to see that they are actually it looks like the attractive sectors are the ones in which actually traditional industries are very attractive because they haven't innovated so much on that with deep tech, either with robots or other things. You can actually start improving that.